All right, let's get straight to it. The KOSPI hitting an all-time high? That's just noise. The real story, the data, is screaming a classic distribution trap. Now, the alpha signal here isn't in chasing the index. No way. It's in the aggressive capital rotation we're tracking into two very specific security sectors. So what we're going to do is break down this early warning indicator coming out of Asia and use it to build our battle plan for the US Open. And this quote? Yeah, this really nails the central conflict we're seeing. On the surface, you've got this story of incredible market strength. But you look underneath, and what do you see? Smart money is absolutely heading for the exits. And they're using all these positive headlines as cover. So here it is, laid out plain and simple. The signal versus the noise. The headline, it's all about the market clinging to a new record. But the data, the capital flow data, tells a completely different story. We're seeing institutions execute a highly coordinated exit, selling directly into that retail-driven rally. Okay, take a look at this chart. Now, at first glance, the index looks strong, right? But look closer. It's stalling out right at the peak. This is what we call churning. You've got massive, and I mean massive, volume, but the price is going nowhere. It's not making any upward progress. And that, right there, is a huge warning sign that the momentum is completely failing. And here's the reason for all that churn. 1.2 trillion Korean won. That is the wall of stock that retail investors just absorbed today. Think about it. The big institutions needed an exit door, and retail investors basically opened it wide for them, providing all the liquidity they needed, right at the very top. And this brings us to a really crucial market mechanic, the distribution phase. So you know how it works. After a huge run-up, the smart money has to unload their positions. But they can't just dump them without crashing the price. So what do? They sell into all the public excitement right at the peak. And let me tell you, what we saw in the KOSPI today, it's a textbook example, straight out of the playbook. Now, this market heat map, this is the proof. Just look at that huge red block for Samsung. That's concentrated selling right there. For every single buy order coming in from retail, you can bet there was an institutional sell order just waiting to be filled. And the result of all that? Well, the index closed basically flat, plus 0.03%. But the key components, the heavyweights like Samsung, they were down over 1.5%. That's the distribution in action. Okay, so here's the most important part. That capital isn't just disappearing into thin air. No, it's moving with extreme precision. We're tracking a major rotation out of the broad index and into very specific areas, places where the investment logic is still totally defensible. So let's follow the money. First up, we're seeing this really clear split happening right inside the tech sector itself. On one side, you've got Samsung. Think of it as a proxy for broad tech, consumer electronics, the whole shebang. It was down 1.56%. But on the other side, you've got SK Hynix, which is a pure-play AI memory supplier, and it was up almost 2%, a total divergence. What this tells us is that the market is making a very sharp distinction right now. It is selling off what we'll call legacy inventory, the broad consumer tech exposure that comes with a giant like Samsung, and it is buying AI revenue. The strength we're seeing in SK Hynix confirms that the bulls are actively defending this key supply chain node. And why? Because it's directly tied to Nvidia. This isn't about tech in general anymore. This is about pure-play AI infrastructure. Okay, the second rotation we're tracking is even more dramatic. On the left, you've got a consumer EV, a pretty good symbol for the general economy. On the right, a self-propelled howitzer from Hanwha Aerospace, which is all about national security. What you're looking at here is a visual of capital literally fleeing the consumer sector and just piling into the defense industry. And the numbers just back this up completely. The divergence is absolutely extreme. You've got the KOSPI basically flat, Samsung down, and meanwhile, Hanwha Aerospace just erupted, up almost 8%. This isn't just a rotation anymore, it's a stampede. So what's the big picture here? What's the overarching mechanism we're seeing? It's simple. Global capital is reallocating. It's moving away from anything tied to general growth and pouring into assets that represent specific security. And that security comes in two forms: national security, which means defense, and data security, which means that pure-play AI supply chain. And this brings us to the bridge, connecting the Asian close to the US Open. The action we just saw gives us a really clear wait-and-see signal. That distribution right at the top suggests that any broad indexed upside is going to be really limited. So we should be expecting some choppy theme-specific action, which is exactly where the real alpha signal is hiding. All right, here's our battle plan for the U.S. session. The primary trigger for volatility today is going to be Fed Governor Bowman's speech, scheduled for 12:10 p.m. Eastern. Now, she's known as a hawk, so you can be sure the market is going to dissect every single word. Remember, we don't predict, we prepare. So here's the execution guide. It's an if-then scenario. If Bowman comes out hawkish, we're looking for yields to rise and tech to sell off. The key tactical level to watch is that 25,600 support on NASDAQ futures. On the flip side, if she sounds more dovish, we'll be looking for a relief rally. The critical resistance we need to reclaim in that case is 25,740. So these are the two scenarios that are going to define the entire session. The bull case is simple. NASDAQ futures reclaim and, more importantly, hold above 25,740. If that happens, the rally probably continues. But the bear case? That's the trap scenario that Korea just signaled, and that gets confirmed if futures break below 25,600. A break there would signal that the distribution phase is over and the markdown phase is about to begin. Okay, so here's our focus for the session ahead. Number 1, do not chase the index. The real action is happening underneath the surface. Number 2, remember where the smart money is hiding. It's concentrated in defense and pure play AI. Number 3, if you're holding broad tech positions, you need to tighten those stop losses. And finally, remember the early warning indicator from Korea. It's pointing to a very choppy, highly selective market. So the data from the Asian close has given us a very clear roadmap. It's revealed a major capital rotation already in progress. The only question left is, are you positioned for this critical shift from general growth to specific security?